Hey everyone, my name's Andy. My channel is Finding Value. If you like making money and you want to join the winning team, subscribe to the channel, give me a thumbs up for this content, leave comments below if you guys have any questions about anything. Today I'm going to go over, I call it ratio day. There's going to be a lot of ratios, and I'm going to look at the overall market and sectors to show you what they're doing. What do they tell us? And what are my opinions on the market? So let's jump in here. I'm going to call this ratio day because half of it's ratios and the other half is just looking at price charts. And I'll describe why these are important. So this is the gold to monetary base ratio. And someone had asked, is all these ratios are cheap to gold, but what if gold's expensive? I'm showing you that gold is cheap. And it's cheap because when you compare it to the monetary base, it is way down here in no man's land. So it's the monetary base, or how much money is out there, versus the price of gold and the holdings that we have of gold. So looking at it from a monetary base to gold ratio, gold is extremely cheap. Another way that we can look at gold and see if gold is cheap is we compare it to the Dow Jones. This is the Dow Jones to gold ratio. This ratio, whenever it's above the red line, means that gold is cheap up here and gold is expensive, or stocks are cheap, at the bottom. Right now we are in an expensive area over here where gold is inexpensive in relationship to the Dow, or Dow is expensive. And this is the real chart, real time, showing you that this was the last commodities bull market as it was coming down. We had one little blip. It bottomed in 2011. It was coming back up where the Dow Jones was outperforming gold. We broke to the downtrend here. And even though we broke this little uptrend, I still think we're in a downtrend, and this will eventually head to the downside. We're at 17.5. That means the Dow can buy 17.5 ounces of gold, and that puts us above the red line. It is still expensive, and we haven't been to the cheap end of this spectrum since the 1980s. So I think we're going to head back on down more towards this green line, and I think we're going to blow through the green line and go back to a valuation somewhere close to this eventually. Might take 5, 6, 7, 10 years, something like that. This is gold to copper ratio, and you can see if you just look back here, copper was outperforming gold and had bottomed at the top of the commodity bull market back here. Then you could see during the crash, gold held its ground and copper went down quite a bit. And we went all the way to a 750 valuation, which was extremely cheap for copper. We were going in an uptrend for a little while, and now we broke this uptrend line, and we broke to the downside, signaling what I would say is positive for a commodity bull market, positive for the economy and whatnot. So I think we're going to have inflation. Same with gold to silver ratio. Silver's broke out to the downside. We are heading lower. We're at 64 ounces to 1 ounce gold, which is good for a commodity bull market. Gold to oil ratio. We're still in an uptrend here. I think this is an incredible value up here. You can see it even broke to the upside of that. Came back down. I'm expecting this to break to the downside. We're at 1 to 28 right now. Still on the cheap end, looking pretty good, but oil is definitely outperforming gold significantly. TLT to gold. This is bonds, 20-year bond to gold ratio. And you can see last bull market, we were coming down. Gold was outperforming bonds this time here, except for the little 2008 crash. Bottomed in 2011 when gold bottomed. Bonds were outperforming, and now, again, gold is outperforming bonds. Pretty crazy. So I think we're heading into a commodity bull market. And here is the ratio. This is the commodity index to the S&P 500 ratio, just signaling that commodities are cheap in relationship to stocks. Now let's look at some of these market indicators and the market pricing that we have going on today. We've got yields going way up. Look at this spike here. So yields are spiking higher, and I don't think that's going to be good for anything that's stock related. When yields are low, they typically can hold higher multiples, PE ratios, that is, higher multiples on the PE ratios, and stocks are not going to like this. And what do we see? The S&P 500 not liking the spike. But eventually, I think this is going to roll over or go sideways for a while. I don't think it's going to be an outperformer. And if it does continue to go up, I think gold and the commodity complex will go up at a faster rate, which means that the ratio will still compress. It'll just compress with commodities going up that much faster. But looking at this, I don't see a bearish engulfing or dark cloud cover or anything super significant signaling that this is going to be some long-term downward movement. I think it's going to be something similar maybe to a pullback that looks like this, and then we'll bottom out, and then we'll head on up. That's my guess. Same thing with the Dow. I don't see a bearish engulfings. I don't see, I mean, there's some here. There are some, but I don't think this is going to be the beginning of the end, so to speak. I don't see this huge fallout yet. I think it's just a normal pullback. QQQJ. Now this one's, I think, a little bit different. We got a nice dark cloud cover here. I'm seeing all these bearish engulfings with larger candlestick down days. We got a nice big down day here. I do think we're heading lower. How long it will last, I'm not exactly sure. I don't know if this is like an exact top where this thing's going to go down 50, 60, 70, 80%. But it is going in a pullback mode. I would be cautious. Now here's Tesla. Again, we are pulling back. It's pulling back pretty hard, 7% down day. We could get down here quite a bit. I thought we'd have another up day or two and then go down. But it looks like the selling pressure is pretty strong and it just went straight down. So we'll see where this thing ends up, but I would not be jumping in front of this momentum. It is strong and it could go down quite a bit. BALE, here's another one, bearish engulfing. So be careful. We're in a pullback mode. This entire market is selling off. It's probably going to drag everything with it. So BALE is showing a bearish engulfing. Probably going to have a pullback here. URNM, North Shore Global Uranium Mining. Again, I see how this is a big down day and there's small up days. I'd be careful of this thing going. I think we're still going to continue to pull back. I don't think that's at least the way that I'm reading this. I think we have a little bit more pullback mode left in it. SILJ, there's no topping pattern, nothing here, just a big down day because everything else sold off. We'll see what happens tomorrow. Same with gold. Or sorry, this is GDXJ. We do have a bullish engulfing. We had a big down day because everything sold off. We'll have to see if the sell-off continues. If it continues, then we might have a pretty good-sized downtrend here where it's not correcting because we do have support down here. We do have support, and we'll see if this holds. If this breaks down, we may have further downside. Dang. So what I would do is do nothing. I'd keep my positions. I'm waiting. I have money. Well, I'm accumulating money, making money. I'm just waiting. I don't see bottoms yet. And I wouldn't necessarily be adding in here. I'd just be waiting. I'd be patient, and let's see where this market takes us. I'd like to see the overall general market kind of slow down its pace going down before I start buying anything. So patience. I think some of these look like we're going to pull back, like VALE. I looked at some of the other charts in other sectors. Oil still looks strong. Gold it's coming under pressure because we got a lot of selling pressure. Bonds sold off quite a bit. I mean, bonds got absolutely murdered. So they're pulling back quite hard because yields were going up so much. And it's kind of weird because the dollar was basically flat. So we got this flat dollar. We got bonds getting crushed, and then we've got gold going down. It's like, where's this money going into? If the dollar's not going up, if bonds are not going up, where's it all going? So kind of weird where this money is flowing. I'm trying to see where it's going. I don't really see where it's going. It's not going into commodities. It's not going into precious metals. It's not going to the dollar. It's not going into stocks or anything like that. So maybe it's not going into, I think emerging markets was down too. So it's kind of almost down everywhere. We'll see what it brings us tomorrow. If you guys like this content, subscribe to the channel. Give me a thumbs up. Leave comments below if you guys have any comments. And I'm not doing anything. I'm just waiting. Thanks for listening. This is Finding Value.